Good morning. I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alexia with The Street, and together we bring you Morning Call Express. Scott, stocks kind of reversed direction on Tuesday and ended in the green. Futures now trying to claw their way higher. Of course, tech is off, with Apple kind of dragging the indices down. But do you have conviction in the kind of rally we're seeing in the S&P and the Dow right now?
At this point, it's almost hard not to. We've been trying to connect the dots the entire way up ever since we reversed on that Tuesday 2 weeks ago. And yesterday we passed another test. We put retracement rules on the table. Where could we hold? Where will some commitment come in? And we held that top 25% level again. And yesterday the key was to watch the banks. Which direction would they take the banks? Were they priced in? And was it enough of a catalyst or enough to just get them out of the way where they could go higher? And that's when the market reversed in that first hour.
But can we really trust the rally in the financials? I mean, I talked to one portfolio manager yesterday who said, honestly, it's just really hard to nail down these earnings and to really sort through them and understand them, which is why expectations can be so murky.
Well, that's why I look at levels. We talked yesterday. I said if Goldman Sachs could stay above 98.5 for more than 60 minutes, not just for 15 minutes or a half an hour, for 60 minutes, show commitment, that'll squeeze the shorts and that'll help the sector, and that's what happened. And now, if you take a quick look at the S&P, let me show you what we were talking about yesterday. Here was that Tuesday reversal, the day to take notice. Okay, the whole way up. We never really pulled in that much. This was the first time we paused. It was a 25% retracement. We tried to do it again, last Thursday. Then yesterday, here we are again, holding that 25% area. That's showing me commitment. That's showing me buying. And the path of least resistance right now could be to this 1245, 1255 area.
All right, so then what are you doing? Would you be adding to some long positions and not shorting?
At this point, I put a lot of longs back on yesterday. When we went back above 1200, I bought the Spiders, I bought the XLF, some Goldman, some Bank of America, some LVS, some of those. So what I would do is if you bought yesterday in the hole, because what I like to do is I like to buy on weakness, and then in this up open, you sell some, and you keep maneuvering. You keep buying some, selling some, shorting some Spiders into key areas, and manage your positions through this rally, and don't fight it. Because I'm getting a lot of emails from people that have been fighting this rally since a week and a half ago, and they're in trouble, and they're trying to make excuses on why they're still short, and there's a lot of them to make out there with the headlines.
Well, which means that there could be a short covering rally on top of that then if there's a lot short, right?
Well, the pain trade right now would be that, and it's already started because guys that have been unflexible and who have been just trying to short each move, they're in pain, and at some point they might have to chase and cover because I don't think they've all covered yet.
Now, is tech a different strategy, of course, because with Apple disappointing earnings yesterday, that stock is down, that stock is dragging the NASDAQ down. And also, it's interesting, Apple has a 100% beat, as Bespoke said, and it usually pops about 2 and a bit percent on the day after it reports. Obviously, totally not making that yesterday. That was a really big disappointment. You were taking some options into Apple's quarter. Now, what are you doing?
Well, first of all, those options are worthless. So if you take a shot into earnings with options, that's what's going to happen. But at least you know your premium paid. For guys that are long-term holders of Apple, what I would suggest is this. First things first, don't panic because they still had over 50% earnings per share increase year over year, revenues up 40%, and they traded a P less than 15. So by no means is it overvalued.
And $82 billion in cash, not too shabby.
Not too shabby. I wish I had a little percentage of that. But anyway, watch to see what happens in the next few sessions. You have a big earnings gap to the downside. We're opening around 396. Short term, I'm going to look to see if I could buy the stock versus a 15, 30-minute low for cash flow. But if we fill that gap in the next 3 to 5 sessions, that'll show that that downside gap has no power and the market's giving it a pass. If we open up at 395 and we close at 385 and that's a huge hole in the stock, that hole can control the stock for a while and then we figure out the new direction from there. But if this gap gets filled, that'll be a non-event, but you have to give it a little bit of time.
Now, in general, tech has been holding up pretty well, and I wanted to look at the semis really quickly to see if there's still a catch-up play or if the Qs continue to kind of flounder here along with Apple for the next couple sessions if the semis have some downside.
Well, the Qs have been very strong. It's been giving us leadership. Intel yesterday was very impressive. We talked about Intel, how well it was acting, and now it's up into earnings. If you look at Intel, I would say if you have a lot here, look at the move. This was your pivot buy. This was your add, and then it flagged nicely. Now it's opening well above 24. I would take some profits in Intel, but I think you could hold some. And if you look at the group, the semis as a whole, acting really well, okay, off this low, holding higher into some resistance. It's going to open up above 31. Some might use a little bit of this excitement to sell into, but I think the semis are one of the places to be also.
All right, then I want to talk about Morgan Stanley. We heard the report come out today, earning $1.14 a share on revenue of $9.9 billion. Now you have to take away $1.12 of that in order to account for the widening of its debt-related spread. So they really made 2 cents a share. That still beat expectations. So what do you want to do with this stock today? Is it opening higher?
At this point, I'm not going to touch Morgan. I got
Okay.
long Goldman and Bank of America yesterday. That'll probably give them some follow through. You know, it's a little harder for the banks to rally today. If you look what the XLFs did yesterday, yesterday was a day that had some power. So I do think there's some room to 13.5, 14, but buying strength in banks are tricky. Wait for a tight pattern, wait for the volatility to expand like we saw in Goldman yesterday and Bank of America. Look at Morgan. Morgan had a decent day yesterday. So now Morgan's going to be opening up around here. So I would
he's a
sell some. It
profit-taking
could be,
too,
it could be a
right.
little priced and kind of maybe like the JP Morgan day where it had a big move and they sold it. So today's not a day to just start loading into the banks. Yesterday was your day to enter.
All right, so for more of the earnings trade and more stock picks for today, you can check out the entire morning call on the street.